Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up. And this is for election night. And this is November 3rd, 2020. All right, my friends. Big up day in the stock market. You can see most markets were in the green. A pretty day. But what does it mean? Now that the politics are coming to an end, I no longer have to be involved in that. We'll see who wins. May the best candidates win. And whoever they are, we should all get behind them. It's that simple. That's what you do, and that's what makes America great. May not agree, but you get behind the people. You don't spend your life fighting the people. And if they then don't do right, then you change your mind. But it can't be that from day one, whoever's going to win, we fight them for another 4 years. That's all. I don't know who's going to win. And I don't know who's going to win the Senate. That's going to be a big issue. But I do know charting. So let's go right to the charts and see if they're telling us anything. As you know, I believe that we fill gaps in charts. So there is a gap right here that is left. And in order to fill that, you'd have to go up in XLK to fill it to this day's low of 115.79. So today we tried again. We're nowhere near that. We're at the 114.10 level. You know, if you get a good outcome tonight, I don't know the definition of good, by the way, that could happen. When I look at the chart, it is still bearish. As a chartist, the one thing you want to do is take your ideas and have them, but don't apply them to the chart. When you do that, it is the way to lose. Your game plan can be set ahead of time. Don't let the chart, your interpretation of it, don't let your thoughts on what's going to happen change what is happening. This is still a bearish market. You still have a clean pattern of lower highs, lower lows until you take out 114.68. Nothing's going to change that at this point. Where did the market find support? Pretty much where I was explaining it to you. The first challenge when you come down to a 100-day average, 100 is not like a 50 or a 45-day average. It's much more important, and the 200 days even a more important number. The market's price that things move around most often, I have found, is the 18-day average. Now, you might like the 19, the 20, the 21, whatever your cup of tea. But understand at least what you're doing. I understand what I am, and this is the one that I am very, very comfortable with, especially in the futures market. But I have found that it's applicable in the SPDRs and ETFs since they trade off the futures. In some of them, not obviously every one, but a lot of them. So I'm looking at this and I'm saying to myself, okay, you hit a combination right here of the 100-day average, the Bollinger Band. You did a little slippage and you've come back above it. Okay, but you're still in a downtrend. You have the swing line down because you're under the 18-day average. The bias is down. 114.68 takes me away from that. And I have a market that has put both numbers under 20 for the very first time. Second time. Third time. That's called an embedded reading. 3 days in a row where you're going sideways under 20 is embedded. If the red pops over the 20, and it's close, but it's not there, then it, especially on a closing basis, the odds favor you're going right back to the 18-day average. Who controls the market going home? The bears do. In order to lose anything, I believe this is the number one indicator. Get over that. What do I hate about this chart? Unlike the futures, which are only closed 1 hour during the week from Sunday night until Friday at 4, you don't have a lot of ways to protect yourself in these. The futures offer a better way to do that. In SMH, today negated the downtrend. Again, the same pattern, lower highs, lower lows. You know my thoughts. I've said them to you. If you're new to this, it's different for you. The first time you hit a Bollinger Band, upside or downside, I teach. That is where you take a chunk of cash. I'm assuming you're long if you're over the 18-day average, and I'm assuming you're short if it's under it, okay? Just an assumption, doesn't mean that's correct. First time you hit that, you take a chunk of money off the table and you drop your stop way down. And what's happened here is that worked out pretty well, right? So now the market's out of a trend. I have a lower low, higher high, momentum turning up, resistance, the first challenge of the 18-day average. I'm very aware that anything can happen in the morning because of such a big report you're going through called the U.S. election. More than aware of it. Could you be up $10? Yeah. Could you be down 10? Yeah. Why go through the report? As a trader in these vehicles, traders, and that's what these vehicles are built for, trading. They're not investing like, hey, I'm going to buy Apple and I'm going to own it for 5 years. Could you? I imagine you could, and I'm not saying you can't, but they're more for the trading type public. And that's what I'm looking at on that. In the industrial sector, you went right back to the 18-day average. So let's take today off. You came down, you hit the Bollinger Band, even the 100-day average combination, and now you've spun right back to that number. You're going into the report on a neutral basis. The swing line's down, the bias is up, and momentum is up. In XLE, what did you do? You went down to the Bollinger Band, you held the support. That's what I teach. That's what you should do. That is not a buy. You're not going long to go up. It's one thing to get out of shorts. It's a very different thing to go long because you could run into this. And then you've got to understand what to do with the slow stochastic study. When you're not embedded, the odds favor you're going to bounce away from it. And that's exactly what's occurring right here. But it's not a trend to the upside. QQQ. Well, how many days do we have where both numbers are under 20? Doesn't matter. Didn't do it today. Done. So I have an oversold market. The very first challenge of the 100-day average, I told you this all week, I think the first challenge is where the people that they'll look at this and say, gee, I haven't hit that 100-day average in a long time. I want to own the market there to go through the election or whatever their thought process is. It is certainly not my technique, but I understand it's their technique. But the combination to me, more important, is the first challenge of that with the Bollinger Band. You'll hear me say it over and over and over. That's where I think the smart money comes out of their shorts or a chunk of them and drops their stop way down. And as you can see, the market gave you a little bounce. Emerging markets, you got down to that 200-day average. So the first challenge of the 100, you got back up to the Bollinger Band. I think that the people that want these markets, and this is a popular trade with a lot of analysts saying that the emerging markets are the place to go. They may be very right. I don't know. But I understand that you're going to attract people. But all I care is you got down to the 200-day average and the lower Bollinger Band. Right here is where I think a lot of traders came out. And if they dropped their stop, they caught a chunk of it until right here, yesterday. Certainly, that would have knocked a lot of traders out with the trailing stop. Now, if the market rallies, and I don't know if it's going to rally, I know it's still in a downtrend, I'm looking for resistance between the 100-day and the 18-day. That's where the market went. So, momentum was oversold. It's correcting that. You still have one of the numbers under 30, so it's still oversold in my opinion. The trend is still down. This is still a sell area for the longer-term bears. GLD. All you did, in my opinion, is come back into the center line here. You tried a downside breakout right back here, and it failed miserably on this chart. You closed here at 176.13 under the lower Bollinger Band, and that number was, let's see, it was in the bottom quadrant of the range, I believe. Let's see, 64.77 cents, 77, and that, no, you didn't. That's not going to be it. You had two moves under it. I look at quadrants. Take my charting course, you learn that. Market resistance, first resistance, 100-day average, okay, because you got under it, pauses. Now if it rallies, 18-day average might be the next number, and that's all that you're at. And I realize a lot of people going, this is it in gold. I don't know. I see a sideways market so far. I don't see it breaking out at this point yet. Either way. Gold miners. Big rally. Okay, right back to what? The combination of the 18 and the 100-day average are no longer oversold. It certainly didn't throw a buy signal out the way I define buy signals. It has given me a reason where the bias is up because it closed over the 18-day average. I think the shorts came out here, and I don't see reason for them to have sold today because you were oversold and you still are. When you're oversold, I don't think the pros get aggressive. I think they put filters on different parts that they do. Also, who knows what the election's going to hold, but I'm a chartist now. I'm out of the election mode. Whoever wins, they win. I'm out of that. Now I'm back to looking for opportunities. In TLT, the trend remains down, oversold. Remember that, oversold. First challenge of the lower Bollinger Band, if it's hit, I'm looking for the pros to step out, and I think they'll get out also if you hit 159.20. Trend down, oversold, another target, the lower Bollinger Band. FXE. So the market goes down, hits the combination of the 100-day and the Bollinger Band in a downtrend. Go to my videos here. You'll hear me say I think the pros would have covered shorts. That is not a signal to go long. It's very big difference to cover shorts from that. Falls a little more, so what? The odds of you catching the low of the market or the high are called luck. That is not skill. Catching zones is where the skill is. Got it? And catching it within a monetary certain amount so you're not just there going, oh, I'm in a zone. Well, that's a teaching lab in a school, not the real lab of money in your pocket. I don't think you disagree with me. For all of you that are ETF spider people, you now want to get this information, especially from us now. There's so much talk that you want to be in the reinflation trades, which are the commodity markets, which are going to be the gold, the silver markets, the copper markets. It's going to be the stocks that aren't the high tech, they're saying. Well, have you learned about all that? We cover it. We're commodity people. And you're going to see stuff by seasoned pros that are writing a lot about this. Now, you don't have to take all of the letters. They're free to you. You can choose which ones you'd want to get. Take a look. The best thing to do is get our free charting software as a trial. Take a look at that, because now you're hearing the oral commentaries and you can go back and say, I want financials. You'll hear David Hightower. You'll hear others that are experts in this. They'll come on short, brief, right to the point. Choose what you want. But if you're going to play that game, and if you're going to join in the scenarios that many think, be it the emerging markets and so on, and you don't learn a bit about the futures and why you're buying those, well, you got one hand behind your back. Why not take it away from there? Go to our website, free offers. That's where you do it, or call my staff. They'll get you set up with exactly what you need. I'm Ira. Thanks for watching. Let's go watch the election results, and it's going to be on all night and through tomorrow. You know that.